Guys, again today is 14th of July 2020 and right now it's about 6:25 p.m. and again I want to discuss about Nifty in my own way. So the question that's going on right now is that Nifty is having a very high PE value and it's about to fall massively. I thought, why not to have a look at it and see, is it really about to fall? Is it really about to fall massively? So um, I don't know. I'm quite an optimistic person in stock market. And अगर आपको याद होगा तो जब मार्केट बहुत बुरी तरह फॉल कर रहा था on 19th of March, that time also I made a video. I in fact had a live interaction, right? I had a live interaction and I said that I will be actually interested in buying the stocks right now. I think this is the one where I did talk about stocks like this was the day, right? TCS and all, when they were falling down, and I have actually talked about buying this stock, right? I have advocated that this is the right time to buy this stock. So if you just see here, and these are the stocks that I had given, some of the stocks that I had given. I don't know what the date is, 19th March only, right? So market was falling down, right? If you go back to the 19th of March, you will see that the market was falling down. And whereas I was not actually in a mode to sell, I was rather in a mode to buy. So this is how it was. Market was 11th March, 17th March, somewhere here. Market is somewhere here, right? It has had such a massive fall, and yet I was interested in buying it. See, a little bit more it went down, and after that it has just been reversing, right? 19th is this day. This is 19th. This is 19th, right? From my this thing, when I conducted that live webinar, it just went another 300-400 points, and after that it just returned, and it's been going up, right? That was a time, the pandemic has just set in, and situation was not really good. It was very, very people, we all were very worried that it's heading, like it's just coming all over. Now almost 3 months have passed by. Pandemic has gone into all over the world. The countries have been closed. A lot of things have happened, but at the same time, the economy has recovered, right? I would say whether economy recovered or not, but stock market has definitely recovered, right? A little bit resistance that one can see over here was at 200 DMA, right? SMA on a daily basis, this is a daytime frame. So see here, this is a cluster of candles that Nifty was forming, right? This is a cluster of candles that Nifty was forming, and which was pretty much evident from here. A breakout on either of the side will actually decide which direction Nifty will head on. And if you just go back, till yesterday night, Nifty was 90 points up. Had the international market remained positive today, we would have closed somewhere here at this level. But suddenly there was a drop in the market and it fell. Now, if you go back and have a look where we stand today, right? Where we stand today is actually a very, very strong support region, right? This region is a very strong support region, right? Nifty reversed from there. It has taken a resistance from the same level many times, and it has taken a support from the same level many times. So this is a strong support or resistance level, right? See here, it has taken on a particular day a resistance, right? Today it is again little bit recovery towards the end that has come. It has come closer to that point. Have a look at the sectors. Almost all the sectors have fallen down. The rally of falling down has led by Nifty Bank, Nifty Private Bank, PSU Bank, and the metal sector, right? And finance. All these were leading the fall in Nifty, right? Having said that, let me come back and let me get you back here. The question still remains, is Nifty about to fall? Is Nifty going to take a big hit from here? So before I proceed on, let me introduce myself. I'm your host, Dr. Seema Jain right now. I'm a PhD in physics from IIT Delhi, but fortunately or unfortunately, I'm in stock market, and I'm a SEBI registered research, one of very few women who are SEBI registered, and founder and chief mentor at StockPro. I'm partner with Zerodha, Upstarts, Fires, and Asta Trade. So I have prepared a slideshow for you. We're going to talk about something called market cap, right? So when we want to understand economy of a country, we need to know what makes the economy of the country. So it is basically market cap. What is market capitalization? Market capitalization refers to how much a company is worth as determined by the stock market. It is defined as the total market value of all outstanding shares. So suppose a company have about 100 shares of 100 rupee each. So the company's market value will be, market capitalization will be simply 10,000. So to calculate the company's market cap, multiply the number of outstanding shares by the current market value of one share. Companies are divided according to the market capitalization: large cap, mid cap, and small cap. So there is not a very rigid, this is not a very rigid criteria, but for my personal I have divided into three parts, right? Some people have different criteria, some have different criteria. So anything above 1,000 to 2,000 crore I call as large cap, right? TCS, Infi, HDFC Bank, Kotak Bank, all which have market cap which is way bigger than 1,000 crores are basically large caps. Then you have mid caps like DLF, or there could be many other, like Just Dial or Zeal. All these could be kept into the mid cap. Then small cap, there are companies which have below 500 crore market capitalization. Those are small cap. This is my deciphering of the three: large cap, mid cap, and small cap. So but people have different opinion. They start from 5,000 crore and above, they call that as large cap, and so on and so forth. So but don't go by this. There are different ways to segregate these companies. Now that there is a next question that basically talks about what is gross domestic production, GDP, right? You have to understand the economy of a country, what is GDP, right? So I'm going to explain you what is GDP. Gross domestic product, right, is the monetary value of finished goods. For example, a company produces cycles, or produces TV sets, or produces mobile phones. So all those goods monetary value, that's that. And the services, like for example TCS, Infi, Tech Mahindra, they provide services, right? So all those services, if you find out value of all of that, which is being manufactured or rendered from a country, is called GDP, right? Gross domestic product. Every single thing that you are manufacturing, whether it is the food, or it is the houses are being sold, or the the services which are being provided in, like in the telecom segment, or in the IT sector, or any kind of services that are being provided, or hotel industries, for example, service providing. So all that comes into the services, right? And you define a specific period, right? It could be from one financial year, or it could be from beginning of the year to the end of the year, or it could be a quarter, or it could be a month. You can define the way you want to define it. Then GDP provides an economic snapshot of a country, used to estimate the size of an economy and the growth rate, right? So simple, it's as simple as that. We all hear, China's economy is GDP is very high. Means they are simply producing more goods. Simply they are producing, they are having more services rendered to the different countries or to their own country. They're producing more goods, right? So that's why the GDP is higher. GDP can be calculated in three ways using expenditure, productions, or incomes. It can be adjusted for inflation, population to provide deeper insights, right? So you can find out how people are, how people's expenditure are, or how much it's production, or how the people are earning money. Each is a yardstick to find out the GDP. Though it has limitation, GDP is a key tool of guide to guide policymakers, investors, and the businesses in strategic decision making. Now we have two components, right? We just discussed about a market cap and the GDP. There's a ratio called market cap to GDP ratio, right? That's also called the Warren Buffett ratio. So let me take you to the next slide. Market cap to GDP, right? So what is market cap to GDP ratio and how does it really makes a lot of difference? So I'm going to start from here. The market cap to GDP ratio is currently at the lowest level since the global crisis. So before you know about market cap to GDP ratio, I'll just give you a brief introduction. In year 2008 and 2009, the GDP ratio was 1.58, right? Means market cap was 1.58 and the GDP, the total goods that were produced, were 1. This ratio was very, very massive, and that is why the fall was a very significant fall. Right now, this market cap to GDP ratio, this is also called Warren Buffett ratio, is at 0.6, 0.6 or 0.7, something like that, right? Which means market cap is only whatever goods are being produced, it's 0.6% of that, right? So that makes the economy very, very solid. At this point of time, economy is pretty solid. So I'm not expecting a 3,000 or 4,000 point drop from this place. There might be 100, 200 or 300 points drop. So that's okay. You know, like this is a cycle of the market. Sometimes market goes up, sometimes market comes down. But the cycle has to be on. You can't expect something to go up and up and up and up and never comes down. So those cycles do continue, right? The ratio which is used to determine whether the overall market is undervalued, overvalued, suggests that it might be right time to put money, but experts beg to differ, right? So there are different people say different things. Some people believe in this ratio, some people don't believe in this ratio. So market cap to GDP ratio has declined swiftly from 0.79 as of year 2019 to 56% in 20, right? Year 20, you know the reason behind it, right? Much below the long-term average of 75% and closer to the level last seen during 2009, according to the report of Motilal Oswal. The ratio, which is also known as Warren Buffett indicator, compares the value of all stocks at an aggregated level of the value of the country's total output. A value above 100 indicates that the market is overvalued, while a number below close to 50 is called that it is undervalued. So I will take you to a website to make you understand it a little better. So that we have every single thing is put into place for our understanding upon this website. I am not a frequent user, but I got the data that I was looking for, so hence I'm here. So India stock market valuations and expected future return, and what I really liked about is that it's been updated as as soon as yesterday, right? 13th July it was updated, right? So what are they, the author says that they update it daily. So he says ratio of total market cap over GDP is roughly about, highest was 1.58 and the minimum is 39.97 and the current is 60%. Expected future value return is 10.7, right, which is a very, very good return. And if you just come back here and see Singapore, Spain, Australia, UK, Hong Kong, Italy, etc., these are all the developed markets, right? And these are the upcoming emerging markets. So Turkey, Indonesia, Mexico, Russia, India. India is at the fifth place, fifth or sixth place, sixth, 1, 2, 3, 4, fifth place. Then Brazil and the China. So what also you can have a look at that India's historical GDP growth, right, which has been decent all this while. And then what he's talking about here is the market cap to the GDP ratio. See here, this is 2008 when the fall came in, right? The fall came when the GDP ratio was highest historically, 1.58. It never has been this high. I don't know how to move this. How do I make it bigger, or how do I make it so see here, 1.58.2, right? That's how it was at peak at that point of time. So market cap was much higher than the gross domestic product, and hence when the whole economy was hollow, and what you saw was a great fall that came up, right? So we're not expecting that kind of a fall. Of course, because of pandemic, there are some effects, but economy is right now rock solid. So I'm not worried about, what lies ahead and what will happen, right? There is nothing much about. So what he's concluding here, the stock market of India is expected to return 10.7% a year for the coming year, which is a very, very decent return. This is from the contribution of economic growth in local current prices, dividend, and valuation reverse to mean 2.24, right? So with this, I want to say that there is nothing to worry about. Don't get hassled about people talking about rubbish, something like Fibonacci retracement or the moving averages. They don't make the remember that these all the indicators, none of the indicators drive the price. Price drives the indicator, right? Price makes the indicator, but price cannot overrule the indicator, cannot rule the price, right? So as long as your data points are in right place, if you understand the economy, so 100, 200, 300, 400 points up and down is okay. There's nothing to worry about. So then just to conclude, okay, these are our contact details, but as far as I'm concerned, I'm pretty bullish on the market. I'm not at all bearish. My stance on market is pretty positive, right? And as it is, maybe another day or two, it may come down further, and then 10,400 is what I believe is going to be can be a big support, 10,500, and from there can be a reversal which can be expected. So this is a cycle in the market, right? Sometimes market goes up, then corrects, then goes up, then corrects, then goes up, then corrects. So there's nothing, this indicator is doing nothing, right? If I do draw the Fibonacci retracement on it, it's doing nothing. Those are just the predictions, right? But the value, the economy is driven by money, right? Where is the money? In case people are ready to invest in the stock market, this will blast up, right? Remember that I made a video at this point of time, but nobody was ready to invest in the market. I remember I have given two stocks at that time. TCS, that was one of my stock. 19th March, if you see, it was at the bottommost price, 15,000, and look at it today. It has made, a few days back, it made a high of 2,300. The other stock that I had given was Nestle India, right? I had given Nestle India, and that stock was also at the bottommost price, right? I am an eternal optimist in the stock market, right? It is not, I'm not one of those who will feel jittery about stock market, because this is a place where money is there to grow from 12,500 to 18,500, right? 50% return this stock has given. From 12,000 to 18,000 means 6,000 points, and 6,000 points means 50% return, right? Those are the two stocks I had given when they were bottomed out. So at this point of time, when the Nifty is looking to be at a resistance, I'm still saying there is nothing to worry about. These are all part of the game. Market goes up, market goes down. Just look at the market with a broader perspective, right? Don't be so narrow, that no, it's going to take resistance, now it's going to fall down. If there is a moving average, so what? Remove moving averages and see price action. So what? Remove moving averages and see what is happening in the market. It'll give you a better perspective. Look at it. I will draw a trend line for you. See here, beautifully, it's taking a support. To me, I can only see only positive in the market. I can't see negative in the market somehow, right? To me, it's taking a support from this trend line. So it's your perspective. Indicators do nothing. So find out good stocks. I've just made a few minutes, half an hour back, another video on sugar sector. Pick up good stocks, invest your money, mint money. That is what I would like to suggest. Take care, guys. In case you want to be, you want to, you can be present on my Telegram channel where I give definitely one stock, one or two stocks, three stocks maximum in a day, some positional, some intraday, and be present on my YouTube channel. I'm sure since you're watching me, you will be watching me here. And this is my website. Get in touch with our team. And if you desire to learn about stock market, these are our contact details, or you can get it in the description box. So with this, I'm signing off. Hope you all understand what I'm trying to say. Take care. Bye bye. See you tomorrow. I'm now getting down to make one video almost every day. Take care. Bye bye. See you.